Welcome. Today we're focusing on CATL's big move, their upcoming listing in Hong Kong.
That's right. A pretty significant development for the battery giant.
We'll break down how much they're aiming to raise, the strategy behind it, the timeline.
The share pricing compared to the mainland, investor appetite, potential hurdles like U.S. regulations.
And importantly, where all that capital is actually going.
Exactly.
If you find this analysis helpful as we go, please do consider liking and subscribing. It helps us keep bringing you these discussions.
Okay, so let's jump in. The target raise.
They're looking at around $4 billion initially.
Right, but that could climb higher, couldn't it, with the over-allotment options?
Yeah, potentially up to $5.3 billion if those green shoe options are fully exercised.
That's a substantial amount. In the mechanics, it's 8 shares, right?
Correct. 117.9 million H shares are on offer.
With a maximum price set at HK $263 per share.
And for those looking to trade, mark your calendars.
Trading should kick off on the Hong Kong Exchange Tuesday, May 20th.
9 a.m. sharp, local time. Trading in lots of 100 shares.
And the split between public and international offering is quite standard, I think.
It seems so. 7.5% for the Hong Kong public.
And the lion's share, 92.5% for the international placement.
So net proceeds, assuming none of those extra options are triggered, are expected around HK $30.7 billion.
Which, as you said, makes this a really big deal for the Hong Kong market.
Definitely the largest IPO there since, what, January 2021?
Yeah, quite some time. So why Hong Kong and why now? What's the core reason?
Well, the primary driver is funding, specifically funding expansion in Europe.
Ah, the Hungary project. That's been talked about a lot.
Exactly. Phases I and II of that massive plan.
And they're putting a lot of the IPO cash towards that.
The vast majority. Around 90% of the net proceeds are earmarked specifically for Hungary.
90%. Wow. That really underscores the strategic importance of Europe for them.
It certainly does. It's a huge investment. Estimates are around 7.6 billion euros total for the project.
And expected to create quite a few jobs locally, too, nearly 10,000.
Right. The remaining 10% of the funds.
That's tagged for working capital and just general corporate purposes. Standard stuff.
Okay, let's talk pricing. The HK $263 maximum offer price. How does that stack up against their A-shares in Shenzhen?
It's actually a very modest discount. We're talking about 1.4, maybe 1.5% below the closing price on May 9th.
That is quite tight. You sometimes see much larger discounts in these dual listings.
Right. Like with Media Group's previous Hong Kong listing, the discount was significantly wider.
So what does that suggest? Strong confidence from CATL and the underwriters in the valuation?
I think so. It signals they believe there's strong demand even without a big discount incentive.
And speaking of demand, what about investor interest, particularly cornerstone investors?
It seems very strong. Reports mention over 20 cornerstone investors have already committed.
Big names involved.
Yes, you've got Sinopec, the Kuwait Investment Authority. Quite a list.
And they've subscribed for a significant chunk.
Around $2.62 billion worth of shares, collectively.
And these aren't flippers. They're locked in for a while.
That's the deal with cornerstones. They've committed to holding their shares for at least 6 months.
So that heavy cornerstone backing plus general demand suggests those upsize options might well be exercised.
It certainly points that way. The market seems quite receptive.
Okay, but it's not all smooth sailing. There are potential challenges, particularly involving the U.S.
Yes, that's an important angle. CATL was added to that U.S. Department of Defense list, the one alleging links to China's military.
Which CATL denies, of course.
They do, but that listing has consequences.
Like restricting U.S. onshore investors from this Hong Kong IPO.
Exactly. Because the deal uses the Regulation S mechanism, it's targeted outside the U.S., excluding U.S. residents.
And didn't some U.S. lawmakers raise concerns with the banks involved?
They did. They urged underwriters like Bank of America and JP Chase to pull out, citing various risks, regulatory, financial, reputational.
But the banks are sticking with it.
Seems so. They're still listed as underwriters.
The IPO prospectus must acknowledge these geopolitical risks, like tariffs.
Oh, absolutely. It addresses the risks from evolving U.S.-China trade policies.
Though CATL maintains the direct hit from current U.S. tariffs is somewhat limited on their business.
That's their position, yes. Partly because policy restrictions in North America have already pushed them towards licensing deals.
Right, licensing their tech to Ford and Tesla, for instance, rather than building large-scale manufacturing there directly for now.
Precisely. It's a complex situation they're navigating.
So, despite these challenges, how is CATL actually performing? Let's look at their market position.
Well, they are still undeniably the world's largest EV battery maker.
The market share figures are quite impressive.
For the first quarter of 2025, they held about 38.3% of the global market. Dominant.
And their footprint is genuinely global now.
By the end of last year, 2024, they had 13 battery production bases globally, plus 6 R&D centers.
Their production capacity growth is also strong.
In 2024, their installed EV battery capacity jumped over 47% year on year.
Reaching 246 gigawatt hours. That's enormous scale.
It is. Financially, 2024 was a bit mixed, though.
How so?
Net income was up 15% year on year, reaching almost RMB 51 billion.
Okay, that's positive.
But revenue actually decreased by nearly 10% to RMB 362 billion.
Interesting dynamic. Price pressures in the market, perhaps?
Likely a factor, yeah. Intense competition. But the start of 2025 looks strong again.
Q1 results.
Net income grew almost 33% year on year in Q1 2025, hitting nearly RMB 14 billion.
And they're not standing still on the technology front either.
No, they keep announcing advancements, like that new super-fast charging battery. Innovation is key for them.
So putting it all together, this Hong Kong listing feels like a really pivotal moment.
It is. It's about fueling that crucial European expansion, ensuring they have the capital needed, even amidst global uncertainties.
And the strong investor interest, despite the U.S. headwinds, speaks volumes about their perceived strength and future prospects.
Absolutely. It gives you a good insight into their growth plans and, the wider EV market's confidence.
So for you listening, it's worth thinking about what this means long term. How does this major capital raised by the world's leader impact the global battery supply chain?
And what does it signal about the competitive race heating up, especially in Europe? Lots to consider there.
Indeed. Well, that brings us to the end of our analysis for today.
Thank you for joining us.
If you found this discussion valuable, please do like the session and subscribe for more analyses like this one.